What I've just done here, Stephanie, put up a chart here illustrating the inflation situation in the UK. And it's a little bit below the 2%, but not very much. It's very different, as I say, from what we're seeing right now in the United States, where we're going away from the 2%.
Yeah, and they've had that's partly because they've had some kind of import price pressures and other things. But it's mainly is that we are getting some wage inflation. And unlike in the US, we're seeing a little bit of that feed into inflation. We still think that over the course of the year, they will not be able to raise interest rates further. But they definitely want to keep that ball still in the court. And there's plenty of reasons why that might change if you could just ignore all the Brexit shenanigans.
Yeah, that's a big if. I just also want to point out that the BOE cuts its inflation forecast for 2019-2020, but leaves it unchanged for 2021. So, David, to your point, sort of maybe a little bit more strength now than in other areas, but that might not last for this year and next.
But one of the things also that Stephanie pointed out, Ben, is Brexit, because compared to where we were a month ago or 2 months ago, there's a sense, maybe justified, maybe not, there's not as big a threat of crashing out of the EU as there once was thought to be.
Yeah, so Brexit is one of those idiosyncratic factors that maybe sets the Bank of England apart from its cohort of central banks globally. And I think the dominant trend this year has obviously been the spillover from the Fed to the rest of the world in terms of monetary policy. So you saw that at the ECB, you saw that at the Bank of Japan, you saw it at the Bank of Canada, you've seen it in a cornucopia of emerging market central banks. And so perhaps the Bank of England, by maintaining a slightly more hawkish bias, is the exception to the rule. Part of that is inflation, as Stephanie mentioned. Part of it is just political risk.